You're listening to Seven Horns AI, your AI-powered market update. This is your market wrap-up for Wednesday, June 10th, 2026. Wall Street closed significantly lower today, with a broad-based decline across the major indices. The S&P 500 pulled back 1.61%, while the Dow Jones Industrial Average shed 1.87%, or over 950 points. The Nasdaq Composite bore the brunt of the selling, falling 1.98% and is now down roughly 6.75% since the start of June. Looking at the intraday action, markets opened under pressure following the release of the May CPI report. The S&P 500 gapped down, and selling was immediate. There was a brief recovery attempt mid-morning, with the Dow managing to claw back about 1.1% of its losses at one point. However, that bid couldn't hold, and by midday, the S&P 500 was down about 1%. Selling accelerated into the final hour, with stocks finishing at or very near session lows, a grinding, one-directional decline with no meaningful dip buying. After the bell, S&P 500 futures are essentially flat versus the cash close, down just 0.08%, with Nasdaq futures down 0.16% and Dow futures off a mere 0.04%. There's no meaningful after-hours move yet in either direction, suggesting the market has settled near session lows. Turning to individual movers, Apple was the lone green megacap, inching up 0.35% in a sea of red. However, Nvidia and Tesla were among the worst performers, falling 3.73% and 3.80% respectively. Amazon, Meta, and Google all declined more than 2%, while Microsoft was down 1.50%. Beyond the megacaps, Supermicrocomputer was the story of the day, plummeting 27.98%. This followed their announcement of a massive $7 billion equity raise, $5 billion in public offerings, and $2 billion in an ATM program to fund $39 billion in AI server component orders. The dilution concerns, estimated at roughly 29%, erased about $12 billion in its market capitalization. On the upside, Applied Optoelectronics bucked the trend, gaining 7.52%, though it's giving back about 2% after hours. With Wall Street finishing notably lower today, Asian markets are likely to open with a cautious tone. The Japan ETF, EWJ, fell 1.83% in its U.S. session, but it is rallying 1.58% in after-hours trading, suggesting Tokyo markets may attempt to stabilize. Nikkei futures are essentially flat from their day session settlement at 64,330, not pointing to further selling overnight. However, the Hang Seng Index, which closed down 0.64% in its prior session, has its futures trading 1.42% lower after hours, indicating ongoing pressure for Hong Kong. China's FX1 eked out a small gain in the U.S. session, but is slightly lower after hours. Today's market downturn was largely driven by three key factors: the hot May CPI report, showing headline inflation at 4.2% year-over-year, the hottest reading since April 2023, renewed geopolitical escalation after Iran's Revolutionary Guards retaliated against U.S. strikes, driving crude oil 2.28% higher, and the significant equity raise from Supermicrocomputer, which crushed AI sentiment. Gold got crushed 4.15% lower despite the geopolitical flare-up, as the hot CPI report and rising rate expectations hammered the non-yielding metal. Tomorrow, all eyes will be on whether the CPI-driven rate fears intensify or fade, and if crude continues its climb on Strait of Hormuz concerns. Oracle reported after the close, and Adobe is set to report tomorrow. That's your market wrap for today. This has been a Seven Horns AI production. For more insights, visit us at sevenhorns.ai. We'll be back tomorrow.